Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Hello, everybody. Welcome back to another live stream. Happy Wednesday to you. Hope you guys are doing well and hope you can hear me, see me. Let me know if we have any issues, but I think we should be good to go. Gold is rallying a little bit here, and it's sort of just stuck in no man's land the last few days. Gold bulls and gold bears seem to be holding up okay, at least in terms of this kind of back and forth support and resistance zone. Hard to say which way this thing wants to move with precision. You never know with certainty, but I generally still think we could see these lows get broken through. There's a couple things I want to talk about in today's video or in today's live stream in regards to the gold chart. By the way, you guys might have seen it in the intro. We are doing weekly giveaways now for prop firms on our website. If you saw it in the opener, what I would highly recommend every single person to do here, if you are a prop trader, there is no reason not to do this because it is free to do. Go to a1trading.com/giveaways and you can join frequently. Every week, you can rejoin for a chance to win a free challenge. Our sponsors across the show, whether it be DNA Funded, we have a couple different sponsors that are game to do this for us. We're giving away challenges every single week. It is free to join. Take 10 seconds out of your day. You might win a free challenge. There's no reason not to. And what I would highly, highly, highly recommend you do is bookmark this page, come back to it every single week, and eventually you might win a free giveaway. So free game we're putting on over here. That's your opportunity. So there you go. Anyways, let's talk gold. Let's talk dollar as well. And a little bit of softness in stocks this morning. So first and foremost on gold, are we showing any updates in terms of where we might be wanting to go? Well, I have to say that this is the first time with gold price in the last few weeks that we haven't seen the sellers immediately take hold and continue the sell-off, right? You know, we did get a bit of a rally and then sellers came back in. We got a bit of a rally. Sellers did come back in, but notice how we have failed to really decisively break through the lows. Now, I would say that that does not automatically give us the fair assumption that now we go higher from here, because we could sit in consolidation for a while before ultimately breaking lower or breaking higher. But I still am in the camp of thinking that the path of least resistance is for price to continue to move lower. It doesn't mean I know we're going lower. It means that I think we probably will, but I could be wrong. And I think, you know, sometimes people get frustrated by that. I had some people really angry in my comment section yesterday saying, you know, that I have been flip-flopping in my view of where I think gold is going. But I think that you have to understand there is a very big difference between acknowledging what you'll do if you are wrong and being surefire. I know what's going to happen. Gold's going to go lower or gold's going to go higher. There's a lot of people that are like that. And I think that that's actually really dangerous mentality in trading. I think actually having a bit more of an agnostic view to where price goes, meaning if it goes up, I'll do this. If it goes down, I'll do this, is actually kind of the key to profitability in trading, Because if you're so convinced that gold has to go higher or it has to go lower, you are going to blow your account because you're going to size your trades as if you know everything, right? And that's the danger here. So let me be very clear. I don't know how to be more clear than this. Somebody, yesterday was like, Nick, now you're bullish, like you're flip-flopping. And if you literally just clicked play on my video yesterday, within the first 30 seconds, I talked about how I was still short gold. I still am short gold at this current moment. I have not changed in my actual positioning, right? People can say all sorts of things, but actions speak louder than words, right? I'm still short gold. That's it. I'm not telling you what to do. This is not financial advice. This is what I'm doing. I could be wrong, etc. But it's weird how like I make one video, hey, gold might be potentially reversing here, and people get upset with me. It's like, look, if the idea of gold reversing higher and actually showing some signs of breakout to the upside, if that angers you or frustrates you or really stresses you out, your trade size is too big. You're not trading, you're gambling. Like the problem with trading, right? You can fringe on the side of gambling. You can jump over to the gambling side of the fence really easy in trading if your trade size is inappropriate. If your trade size is small and you have a back-tested strategy that you're sticking to, it's a lot less likely to just be a gambling session. And I say that like a unprofitable, blow up your money really quickly gambling session. To some extent, there's always gambling to the extent that we don't know what's going to happen with markets, right? That's kind of what a gamble is uncertainty. But the casino gambles with the edge in their favor, right? Technically, a casino, when playing blackjack or roulette or whatever, is gambling as well, but they're doing so with an edge. If you are playing the game inappropriately with big trade size, it doesn't even matter if you have a profitable system because one bad string of losses causes you to blow everything up. Okay? Flip-flopping is the essence of good trading. You kind of get it. You get it. That is exactly right. Like, look, if gold rips higher here, I'll tell you right now what's going to happen. I'm going to stop out of my trade. I'm going to point out that gold shows some strength here. I'm going to respect what's happening in price action. And a bunch of people will comment, Nick, you're just flip-flopping. You're not convicted in your trades. You're changing your strategy, etc. Like, as a content creator in the trading space, that's what happens. And I'm telling you, that logic is flawed. What's actually the right thing to do is to acknowledge reality, to adapt to market conditions, and to move forward with it. So I am still, as we speak, positioned short. I think gold potentially goes lower. But I'm open-minded to whatever happens. If you are not open-minded to whatever happens, you are going to blow your account over and over and over. That's it. Right? I'm adamantly not, I'm a trend follower. When you trend follow, when you truly follow trends, you don't have the ego of saying, this is going to happen. I know it's going to happen. That's like predictive, trading. And then I just don't do that. I react to what is happening. I think gold moves lower. I don't know it. Right? So with that said, if gold gets a rally going here, where do I cut the trade? Well, I've marked up this level here, which actually I was able to get away without getting stopped out on this. But to the bulls' credit, we made all the way down. We made fresh lows in gold, but then reversed again. One minor level for the 1 hour chart viewers out there, watch this 40-60 level. That's where we topped out yesterday. Was that yesterday or overnight? Yeah, yesterday morning, right? So yesterday gold topped out around $4,060 an ounce, came back down, got close to those lows, and now we've got the bounce happening this morning. Okay, so from an intraday perspective, if you're more of an hourly chart trader, here's that 40-60 level. Technically, what would be very bearish for gold would be putting in some sort of lower high here. Like if this rolls over here and does not pass this area, then that's very strong for the bears. So, however, if we are able to come up to this area, I'm not necessarily throwing in the towel on bearishness, right? What I'd be looking for is reaction from this area. I want to see sellers step in. And if they don't take profits, I'm out of the trade, right? That's it. Take a look at the weekly chart. Yeah, I'll look at the higher time frames in just a moment here. My trade is predominantly built off of the 4-hour chart, so I'm kind of focused on that right now. But let me give you the better scenario. Let's talk about the fun side of things. Of course, we've acknowledged what could go wrong. Let's talk about what could go right if you're a bear. If we get this kind of move, stops are getting locked further into profit. So this is the ideal scenario for me, obviously, is if we can break through these lows, stops are going to come down further. Ideally, if we can get down to like 39.20 on gold price, what I will be then doing is trailing my stop loss. By the way, guys, I don't know if you've noticed, my channel has become a gold focused channel. For better or for worse, look, I'm a human being. We put in a lot of work on these videos. I've traded gold. It's the #1 thing I've traded for a long time, but I've made my videos very all-inclusive for a long time. The views on my channel recently have exploded, and it's because I've focused more on gold. So for my gold fanatics out there, if you are liking the content, if you want more gold-focused, obsessed channel focus on gold, do me a favor, hit the thumbs up button, subscribe, turn post notifications on, comment, etc. Let me know that I should continue taking the channel in that direction. I will still focus on Nasdaq and currency pairs, etc. But the channel is like screaming that it wants more gold focus. So that's what we're going to do. I say I'm human because, look, we put in hours of work on this stuff every single day to make these videos. Like, I know these videos, they pop up on your feed. Oh, that's great. For us, it's like all day work. So from our side, it's like, if the channel's getting way more exposure because we're focusing on what people are interested in, then we're going to do that. Because again, a lot of time and effort goes into this content. So, I mean, I'm a gold trader. This is the #1 thing I trade, so I don't mind doing it. I've always just tried to be very like open in terms of what all the things we cover on the channel. I am going to continue to cover those other things, but the focus, I think, is going to continue to shift in direction of gold. So if you are a fan of gold, then stick around. Of course, the other favorite thing I trade is Nasdaq. So I'll also be talking about the Nasdaq. Anyways, that's the focus here for now, is looking for the break lower. If we break higher, out of the trade, move on. That's it. Let's also take a closer look at, look at this. Stocks, speaking of Nasdaq, stocks are showing a little bit of weakness here. Do I want to be long Nas? That is the question of the day. I do want to be long stocks. I will say that very, very transparently. I want to be long stocks, and I have wanted to be long stocks for some time. I've just not had the chance to do so at a price that I feel is a good risk reward. So what I'm looking for on NAS and S&P is a pullback here. I feel like I have been such a broken record on that for a while. But look, markets are all about patience, okay? Stocks are scared of Warsh. That is a fair point, Farmer Oz. Because here's the thing. When we are looking at stocks, they freaked out last time Kevin Warsh came on the stand. The idea of, where was that? That was Fed Day at some point. Was that June 26th? I can't even remember. Or June 10th? I can't even remember. Anyways, a more hawkish Federal Reserve is a threat to the stock market. If yields are kind of ripping here this morning, if Kevin Warsh comes out more dovish than expected, which I think Marco from our team might be onto something with that. He's been pointing out oil prices lower. I mean, look at oil prices today, down under $70 per barrel here, guys. This should be theoretically helping out the inflation story, and yet you have yields still moving higher. Very interesting. You have such a the market is definitely postured for at least hawkishness right now from Warsh, which is a stark reversal of what we had seen previously, right? Like people thought Kevin Warsh was going to come out super dovish. Market got a hawkish Federal Reserve. Instead, now we see the flip side. We see the market seemingly bidding up the dollar ahead of Kevin Warsh. Yields also moving higher. And I do also still have my dollar long position on. I wanted to get into euro dollar. Look at this, euro dollar leaving the station here with me, without me, I should say. Was looking for this move here. So I am still looking for that idea. Pound dollar, still looking for 1.3325. Dollar yen is a absolute train right now. Choo-choo to the upside right now on dollar yen. Congrats to any bulls out there, because this thing is just, I'm kind of kicking myself on this one, because I felt like dollar yen was so, this is hindsight 101. This language should not be taken seriously. I felt like it was so obvious dollar yen was going to do this. Okay. Because everybody was so convinced 160 is going to hold. Ministry of Finance is going to support the yen at these levels. And they did, to the credit of people who said that. They were right several times. But this happens sometimes where central banks like make kind of currency exchange promises and then they don't keep them, right? A lot of the times when they break those promises, the chart runs away. And so with hindsight in my favor, full force, this was an obvious move. I'm saying that sarcastically because nothing is ever actually obvious in trading. Markets are hard to predict. But yeah, dollar yen is freaking out to the upside. Is gold bullish or bearish? So look, I am still bearish on gold. I am not just looking at technicals for this. The reason I remain bearish on gold is multifaceted. Technicals do look bearish. Like if we're looking at just the chart, that's great. But we don't stop there, right? We do not just look at a technical chart and say, oh yeah, the chart's moving lower, it's bearish, right? We also want to look at the macro fundamentals, which have been forward-looking. They have been way earlier to this idea than the technical downtrend even was. Gold became more bearish early in 2026. When you started seeing the breakout of the Iran conflict, inflation expectations rising, yields rising dramatically, the jobs market was already showing signs of stronger than anticipated numbers early on in 2026. The macro turned bearish for gold before the price did. We have been riding the shorts on gold really nicely because the macro has been very confirming of that bias. Take a look at Edgefinder's score over time chart, and you can see that this thing was getting bearish readings early on in June. And if we could zoom this out, way sooner than that. Edgefinder has been bearish on gold for quite some time. Edgefinder is a fundamental macro screening software. Jobs market statistics, economic growth metrics, inflation metrics have all been screaming dollar bullishness, gold bearishness. It has been very binary. It has been very clear. It is probably the strongest macro synergized signal that I have seen in many, many months, and it has been spot on. This is why when you have macro synergizing perfectly, the outcome is so often you get powerful market trends. Look, the markets don't move just because there's squiggly lines on a screen. They move based on what's happening in the real world. Tracking what's happening in the real world, we've isolated to like 10 or 15 key economic metrics that can be observed to get an idea of what those real world trends are looking like. Gold, the dollar, the stock market, gas prices, home prices, people's jobs, inflation. These things are real world forces that drive markets. A lot of the retail trading space has been convinced that all you need to do is look at a technical analysis chart, draw some squiggly lines, and make money. And no wonder the vast majority of people trying to trade lose money hand over fist, because it's not that easy. Listen, I challenge you. If you do not believe me, if you're like, oh yeah, of course you're saying this, you have a sales pitch, you sell a product. You're right. I do have a product to sell you. It's worth every penny. Because if you turn on the television and you listen to the absolute best in the business, the top performing, the strongest hedge fund managers that have made billions of dollars for clients, ask or listen to their interviews, and you tell me how much they're talking about ICT concepts or simple moving averages. While they may use some level of technical analysis, what you are more likely to hear those people talk about is the Federal Reserve, the business cycle, secular trends like AI or energy cycles, etc., business cycles, and of course, the economy. They're looking at the real world to judge macro fundamentally what might be coming down the pipeline. Smart money tracks the real world and builds biases around it. They look with their eyes around what's going on in the world, and they make their predictions and ideas built around that. So that dawned upon me years ago. I was like, wait a second. All the pros that I listen to, all the people that I look up to in this industry, all the people who manage billions of dollars, who are wildly successful, have really good track records, they're not talking about what some random kid in jorts on YouTube is talking about. They're not talking about simple technical analysis strategies. They're talking about the economy and the Fed. That's it, right? At the end of the day, the market moves on news events and bows down to what Jerome Powell, Kevin Warsh, Trump, etc. says, because that's the real world. That's macro. Macro is king. If you're a fan of macro, give me a 1 in the chat. If you're like, I'm on the same wavelength, give me a 1 in the chat. We have any macro traders? Like, I know a lot of people in here are still purely technical. That's totally cool. I'm not saying you cannot make money trading just technicals. I'm just saying that macro is the number one. It is dominant in terms of why markets are moving. The better argument would be say, well, technicals have a lot of it priced in, it's factored in. And that's a bit of a chicken or the egg argument. That's different. And I understand, like, oh yeah, technicals may be reflective of fundamentals, but not always. Like, this has been such a clear example. Gold run up in 2023 to 2025, such a clear example. Macro, inflation was falling, rates were falling, right? Global central banks were cutting rates. That story was, you could be very early on, and price reflected it for years after. And in 2026, the dynamic has shifted to the exact opposite. Inflation has been sticky and rising. Rates around the world have been rising. The ECB raised rates. The Fed is talking about potentially raising rates, right? The macro has updated way before price has been trailing and following it, right? So we keep an eye on the macro for that very reason. Now, if you don't have Edgefinder, just a quick plug here. I know I do have a sales pitch for you. Here's what I've got for you. Edgefinder is a product that we've been building for 5 years. We have a team of 10 people behind the scenes dedicated to building the best macro screening tools that are still beginner friendly for people who want to implement this stuff into their trading. It is not a black box magic crystal ball indicator. Sometimes people are like, Nick, if it's so good, then why are you selling it? It should be your secret system. This is not a copy paste make money software. First and foremost, full stop, I'm not selling a crystal ball here. Edgefinder is a tool. It is a resource to screen and monitor what's going on in markets. I use it every single day in all of my videos, in all of my live streams. I believe it is worth every single penny if you are trying to implement macro fundamentals into your trading. Right now, you can get access to it. Let me actually switch over to our summer sale discount. Our summer sale is currently going on right now. You can get 40% off Edgefinder if you scan the QR code that is below my camera, or click the link that's just been dropped in the live stream chat. Like I said, if you are looking to take your macro to the next level, this is a tool for you. With that said, continuing to stay bearish on gold because the macro looks generally more bearish here for me on our list of metrics. It doesn't guarantee we go lower. It just means right now, as we have said for the last few weeks, The story remains bearish, going to stay there until it shows signs of technical reversal. So there you go. Can this tool be used in the futures market? Absolutely. Yeah, we have a bunch of different futures related things. Bitcoin, euro, like you can, if you trade. So this is not necessarily built for euro US dollar only, or you know, you have S&P 500, you have Nasdaq. So if you trade NQ, you know, you have NQ on here. Technically, it's the same thing. It's just called Nasdaq. So yeah. So let's see. That makes non-yielding assets unattractive. Yeah, that's a underrated comment right there, because here's the thing. Part of the reason gold looks so bearish is exactly what this person is saying. With the dollar and other central banks raising rates, you get rewarded for holding on to cash or bonds or savings accounts, balances, etc. to because higher interest rates offer you something more in the bank to keep it there. Whereas if you own gold, gold doesn't yield you anything, right? Now, I'm not saying gold is permanently bearish. I'm pointing out that if you're looking at gold, it doesn't yield anything. And for some people, the opportunity cost of buying gold is not as attractive as just keeping it in a savings account and waiting for better opportunities. In fact, if you think gold continues to move lower, what a lot of people might do is sit in a savings account, and they might say to themselves, yeah, I'll buy gold if it goes to 3,200. I'll buy gold if it goes to 3,000. Could it go there? Maybe. Am I saying it will? No, because I don't know. I'm a trend follower. I just ride it, right? Wherever it goes, I'm following it as long as the macro and price are synergizing. That's it. Too much time spent on gold when it's not doing anything. I would argue gold is doing a lot here. We are posturing for a move one way or the other, I think. I think for me, there's nothing to do here. Like there's no changes I'm going to make right now, but I do want to map out what I will do, which is if we break through the lows, I'll trail stops. And if we break through the highs, then we'll just cut the trade, take profits. Bitcoin to 50K ball out. Let's take a look at Bitcoin. I mostly agree with you in terms of like something looks broken here with Bitcoin. And I think it might be the whole story around the strategy, kind of forced selling that's going on. That just, here's my opinion on it. The Michael Saylor situation just sounds like the next crypto FTX situation. Does it not? Does that not sound like, for the crypto crowd out there? I mean, if you're a true believer in it, that sort of like forced selling event, if history suggests anything, that would be most likely a bottoming event. Like if this forced selling gets really violent in strategy, it already has been, but let's say it gets way more violent. That's the sort of thing you see at the bottom of a market move. Like the FTX collapse took place around the bottom end of a market move. I think the Bernie Madoff stuff happened towards the bottom of the 2008 stuff. Like the market bottoms on horrible, horrible news. Like when it seems it can't get any worse. So I wouldn't be surprised if 50 or even like 40 could come into play. If you get a real quick sell-off, like a real forced selling event in Bitcoin, that's still within the realm of possibility with market history for Bitcoin. Like, remind ourselves that this has always been living in a up market. Like Bitcoin's entire reality has been lived in a hospitable, for the most part, market environment. We've never had a true serious recession like a 2008 since Bitcoin's inception. Yet during that same time, we've had 80+% drawdowns in Bitcoin. So that's what makes me nervous about Bitcoin as an asset. If you have a true recession in the next 5-10 years, what happens to Bitcoin in that environment? If it dropped 85+% in a mostly hospitable 15-year period, what happens to Bitcoin in a real recession where things go down and they do not come back for a very long time? I don't know. I'm not claiming I have the answer on that. I'm just pointing out, like, if you are a crypto like hodler, That's a serious thing. That's the thing that holds me back from holding crypto passively. I don't know the answer to that. And I don't think anyone knows the answer to that with certainty, right? Bitcoin goes to zero. Like genuinely, it could. Like genuinely, Bitcoin could go to zero in a true economic collapse or recession. I'm not saying I think a recession's around the corner. In fact, I think there's not a recession that I see coming right now. Economic metrics are generally pretty strong out there. Doesn't mean they can't change, but I'm just pointing out that if you get, and also Bitcoin's down 50% with the Nasdaq and S&P 500 at all-time highs. What happens when the S&P 500 goes on a 25 to 30% pullback, which happens periodically? Like, that's my concern. That is where I just can't rationally put a significant amount of my own money into crypto with that ringing in the back of my head. I'm not telling anyone else what to do with their own account. I'm simply sharing what my thoughts are, and that is why I cannot, in good faith, have a long-term passive situation holding on to Bitcoin. It's unprecedented what happens in a true recession. And I have not, from all the crypto people, I've just not seen like a good response to that. And again, I'm not like a perma bear on crypto. I think you could go 10x in the next 1 year. I'm not like betting that I think it's going lower. I'm not short Bitcoin. I'm just unsure that is like, there's no parachute backdoor plan for this if there's a recession. So yeah, I mean, I genuinely think a recession could take it to zero or very close to it. So I too much risk there for me. Fed speech. Do we have Kevin Warsh going on right now, but I believe we've got Alan Perez coming on. Let me just see. Do we have the speech going on here? I'm just checking. I don't see the stream anywhere. Maybe I'm not seeing it. I think Alan might have it pulled up. Alan, totally up to you if you'd like to just listen into the stream, make some commentary, etc. However you'd like to handle it. I'm going to pass the show over to Alan. He can take it from here. Before we do that, just a reminder, 40% off discount going on for the Edge Finder right now. And with that said, someone said not started just yet. Okay. Yep. So we'll keep an eye on it and cover it once it is what is going on. We got 900 people here watching the stream this morning. Thank you for being here, guys. Between all the different platforms we're streaming on, good to have you here. Just doing a last second check to see if anything is moving. So far, nothing too big. There is a speech happening, but I believe Kevin Warsh is not yet on the stand. So we'll keep an eye on it. Anyways, up next, real quick break, and then we've got Alan Perez taking over the stream to keep an eye on what is going on with Kevin Warsh. Don't go anywhere. We will have it up in just a moment. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, everyone. Hope you guys are having a great day here. We got a couple viewers here today, which is awesome. Waiting for that Fed Warsh speak. Baran says, comment, good day or good morning. I think the good morning times are behind us, or good afternoon. I think we're going to go back to good day here. So let's go ahead and see. I have the meeting pulled up here. We have Lagarde speaking here. Fed Warsh should be speaking. So I'll keep an eye on this here. But for now, Fed Warsh is not on the podium or not talking. However, the second that he does, I will make sure to put that onto the screen here and we can watch it together. I'm curious to see if he's going to give some some guidance here on monetary policy, because he did say that he is not going to give any forward guidance or not much of it, honestly. So we'll go ahead and see if he commits to that. I'm sure the people are going to ask him questions regardless, and try to get something out of him, but we'll watch it together here. I have it on my third monitor here. So if I see him, I will definitely let you guys know, and put it on here. In fact, you know what? I think I saw him sitting down. So let's go ahead and see here. Can you guys hear the screen? Let me know. No, can't hear it? Uh-oh. You need to reshare your screen and turn on. Okay, got it.
Guidance. They will have to do a bit of homework.
How about now? Let me know.
The indicators that we're attentive to. They will have to appreciate our intellectual process and what we are especially attentive to. And that
so for those that weren't
you know,
listening here, Lagarde asked a question about forward guidance. So let's go ahead and see how Warsh answers that.
We looked at the inflation outlook, taking into account all the latest economic and financial data, with risks part of our assessment as well. And that's, you know, recent development, as you know. We looked at underlying inflation, various set of indicators, and we looked at the transmission of monetary policy. So it's taking all that into account in the context of a supply shock that led us to the decision that we made.
Speaking of not liking forward guidance, which is going to make this job so much harder for me, this panel, Chairman Warsh, we have inflation in the US that is higher than Europe's and farther away from our target. So why are we not raising interest rates?
I was hoping you were asking me about forward guidance.
We'll get there. Because you have so much to say there too, right?
So we have found common cause. It's what President Lagarde said. I liked her when we met 20 years ago when she was finance minister. After that answer, I love her. Reform does not stop at the water's edge. What I found most exhilarating about the last 2 days here is the kind of discussions that we've begun at the Federal Reserve has a lot of people at this conference open-minded, keen to think anew about the conduct of monetary policy. And President Lagarde's answer on forward guidance, I couldn't have said it better myself. We're going to chart a new course so that we can make better decisions and do the right thing. And so my few days here have been incredibly rewarding on that. On the broad conduct of policy, at my press conference, I said, I'm not going to give forward guidance because we're meeting in 6 weeks, but I have an update for you. We're meeting in 4 weeks.
Helpful. So is July on the table for a rate hike?
So Sarah is trying to get me to break this rule. She's going to fail. There's a lot of data that we received in that meeting. I see many of my FOMC colleagues here in Sintra. I take their views very seriously. I want us to have a good family fight when we meet in 4 weeks. There's a lot of late-breaking news on a series of these things. When we get into that room and shut the door, we're going to have a good debate. But I don't have much more for you than that.
Okay, we'll get back to that. I have more questions for you. Governor Bailey, you did not raise interest rates, even though your inflation is above target, but there are members of your committee that want to raise interest rates. So why are you holding back?
So, I mean, like Kevin and Christine, you know, we all spend a great deal of time looking at the substance of the evidence. And I think an important piece of the substance of the evidence for us is that we've got a softening economy. So we're seeing a softening labor market. We're seeing some softening of activity. Yeah, we think we've got a bit of an output gap opening up. And we had that before the hostility broke out in the Gulf. So that's the contextual setting. I mean, because we're very focused on the risks of pass-through of the energy prices to the indirect effects and things like food prices and the second round effects. And we don't obviously want it to become embedded. It is very frustrating. I was very much of the view that we were going to have inflation back at the 2.0 target, in the late spring. Everything I've seen actually since tends to confirm me in that previous view. It's obviously not there because of the effects in the Gulf. But the decision not to raise rates for me was based on, reading, the evidence of a softening economy. And then a second thing, and this is probably where we're in a little bit of a different position from the ECB to start with, because it's the sort of the adage, where you get to depends on where you start. There was an expectation that we would cut rates this year. That's not unreasonable in the context of the softening economy. Yeah, that was off the table in March, and it's off the table at the moment. So, that was the context for me that I think we had some time, because by taking that sort of, in a sense, that loosening off the table, the mortgage rate went up 1%. So you can argue that we've actually tightened policy in the period since the conflict broke out. But like, Kevin and Christine, we review it every meeting. So we've got a meeting coming up at the end of July, and we will be looking at all the evidence again then. So we return to it.
Yeah, the weakening economy, though, it sounds like, are you more worried about that than the higher inflation?
Well, I'm not going to give you any prediction as to what we will do. I think, obviously, the thing that has happened is that energy prices have come down quite substantially. They're still a bit above where they were pre-conflict, but they've come down. But the other thing you have to be a bit careful with in the UK is that we have a delayed reaction mechanism to energy prices because of the way our household energy price cap system works. So I always say, it's appropriate at the moment to borrow a soccer analogy. I'm afraid we always look a bit better in the first half than we do in the second half.
I'm proud that you used the word soccer. Now that the World Cup is in the US, everyone's talking soccer. Governor Macklem, your inflation rate for May was 3.2%. It was above your range for the first time in a long time, but you have not really spoken about raising interest rates. Are you comfortable where you are?
Well, we left our policy rate unchanged last time, so yes, I guess we're comfortable where we are. Look, on the
going forward without forward guidance.
No forward guidance. What's interesting is we're all facing pretty similar shocks, but we all start from slightly different places, and we have different proximities or different exposures to these shocks. And the benefit of our frameworks with flexible exchange rates is we can direct policy for what we need in our country. So yeah, you're going to see some differences. In Canada, like the UK, the economy's soft. Economy's growing, but it's been weak. There's excess supply. The labor market, there's some slack in the labor market. But yes, inflation is clearly above the target, 3.2% in May. That's a dilemma for monetary policy. If we raise rates to pull inflation down, it's going to weaken the economy further. And if inflation comes down quickly, we're going to regret that we did that. On the other hand, if we cut rates, support growth, there's a risk that the rise in inflation becomes more persistent. So, when we looked at it, we're sort of we think, our range for neutral is 225 to 325 or 225. So we're kind of at the bottom end of our neutral range, providing a little bit of support, but we think it's about the right level to keep inflation contained. The other thing I would say, though, is, and this gets a bit back to your forward guidance question, we got to be humble. There's a lot of uncertainty out there. Those risks could shift quickly. And the other part of our message is, if the situation changes, we're prepared to take action.
Do you think, Chairman Warsh, that the inflationary spark that everyone's seeing and feeling is a temporary phenomenon as a result of the rise of energy prices, which have already started reversing pretty sharply?
Does temporary sound like transitory? Is that what you were trying to sneak
Yes.
into?
Is it transitory?
So I'll build on what Governor Macklem just said. By the way, the four of us all served together in the global financial crisis in different roles. So I would say for us to be back on this stage in this circumstance is great. And they've been incredibly warm to me. President Lagarde has sort of welcomed and encouraged these sorts of new ideas that we've talked about at the Federal Reserve on these series of task forces. And Sarah, my hope is that the results of these can be a public good. If we make progress in thinking about the effect of productivity, the effect of data, new inflation frameworks, this is something we can all borrow and use from. The other thing I'll add is that monetary policy spills over from one of our economies to the other, and it spills back. I think the way Governor Macklin said it right, which is we're all being hit by a series of shocks. In the US, the AI shock is leading to a boom in capital expenditures. We see that first and foremost in demand, but I'm confident we're going to see it in supply at some point. So we're spending most of our time trying to monitor those developments.
Is it inflationary?
Well, in the near term, we can observe it on the demand side, but it's up to the central bank to decide whether it's inflationary.
That's why I'm asking.
Whether, in fact, it finds its way into a broader set of goods. I don't have any news for you on that, but I would certainly rather be in a position where we have two things, where we recommit, the way I know my colleagues have, to deliver price stability. And the other piece that I'll take note of, which shows some difference, I think, among our nations, is the AI boom is showing itself first and very prominently in the United States. I'd certainly rather have this problem where we have massive capital expenditures instead of thinking years back where we had financial engineering, where we had companies that weren't able to deliver profits, so they would do shareholder buybacks. Well, right now they're investing in the future because their expectation is the supply side of the economy will expand. And if it does, that has huge implications for monetary policy. But again, I'm not going to make a judgment now. We'll meet again in 4 weeks. But this is as exciting a time and also as a consequential a time to be a central banker that I can think of at any point, maybe outside of a crisis in my adult lifetime.
President Lagarde, how do you?
Can I pick up on a point that my friend Kevin made? It's the speed at which things change, and that is clearly accelerated by AI. And I think in that context, we have to be open to new measurements, new ways of thinking, new tools that help us and assist in making the right decisions. So I think in that context, the use of scenarios, for instance, that we have now really nailed down with milder, severe, and adverse scenario to make sure that our decisions, are solid and robust across scenarios. The fact that we're incorporating risk into our assessment of inflation. And I think risks, by the way, that we have to the upside on inflation and to the downside of growth are probably more broadly balanced than they were a few weeks ago as a result of what we're seeing, which happens at speed. If you look at how fast the price of oil, spot price granted, has moved down, $72 a barrel now, when it was 120 back in March. These are changes that are just so accelerated that we have to be prepared to measure differently and more accurately using AI, for instance.
How do you make sure Europe doesn't get left behind on AI? I know it's not necessarily the job of the central banker.
It's not the central bank governor's question in a way.
I know you probably have thoughts on it.
No, I'll tell you something. One, I think that we have to consider that as a transformational technology breakthrough and diffusion and material technology. It needs to be analyzed from our perspective, both in terms of how much capex is going in that particular domain, what impact it will have, how fast will it develop, how will it diffuse, how will we reorganize the way in which we conduct work, including at our central banks, by the way, to really appreciate what impact it will have on productivity. But if it delivers the productivity expectation that we have, then it is going to be a radical change going forward. And we need to, of course, from our perspective as central bankers, we need to measure the disinflationary, inflationary impact it will have over the course of time. And it might be disinflationary first and inflationary second, or probably more so the other way around. But it all needs to take into account. Now, I take your point about Europe lagging behind in terms of investment and the frontier companies that are leading the game at the moment. But I think that we are all sort of hostage to each other, if I may say, because we need those frontier companies, but they need the market. When you represent 25% of the revenues of many of those hyperscalers, we need each other. We are in this game together. At which end of the spectrum, at which set of the supply chain to be determined, and there will be healthy competition, I'm sure. But we depend on each other. We can't dispense of them, and they can't dispense of the revenue source that we constitute. So we're in this together. That's my personal view.
Governor Macklem, how's it impacting Canada? Do you get the tailwind from the boom in the US, or are you still dealing with too big of a headwinds from trade, for instance?
Well, look, trade does continue to be a headwind. I mentioned the economy is soft. You certainly see the impact of US tariffs on our exports. I think, coming back to investment, I think we get both some tailwind, but we also get a lot of competitive pressure from the US. The US is investing in a very big way. And our economies are very integrated. We have a very integrated business model in North America. That's why trade uncertainty is impacting Canada. It also means, though, Canadian firms are going to have to be competitive. I mean, what you see on AI, it's very interesting talking to companies. So, you survey companies, you ask them, are you using AI? Yeah, like almost everybody's using AI. But then you say, okay, have you, materially changed a whole production process and, made it, embedded AI? That's a much smaller number. That's something like 10, 15%, depending. So it does show that there's a lot of potential there. Whether it's inflationary or disinflationary, I think looking out, ultimately, I mean, there's so many good reasons why this is a general purpose technology. And one of the things I picked up over the last couple of days is, well, actually, it could be even bigger than that. If it actually accelerates the process of innovation, of discovery itself, it could be even bigger. But when exactly that arrives, when those disinflationary kick in, I think is a very open question. That's another one of those things we need to be humble about. In the near term, we are starting to see some pressures. You can see it. You mentioned our May CPI number. You look at computers up 10%. How's that going to feed through the supply chain? I mean, those are the sort of things we're going to need to keep an eye on.
Yeah, memory chips.
All right, so it seems like we're not going to get much out of Warsh here, and they're starting to pivot off the different economies. Interesting, though, nonetheless. So what I got from that, Marco, they're trying to be very proactive. Lagarde said that she's looking at the price of oil and how dramatically has dropped off here, and that they're trying
you need to share your screen, Alan.
Oh, my bad. Give me one second here. Seems like Lagarde is very much focused on the price of oil and how fast it's coming off, and it seems like they're going to be very flexible in jumping the gun and lowering interest rates if they have the opportunity to do so. So, yeah, let's look at the market reaction here. So we're seeing dollar higher, though it is starting to cool off a little bit here. Like the euro dollar was selling off, but now it's starting to find a little bit of a bump. We'll see. The biggest test will be tomorrow's NFP report. I think, Marco, if you get a hot NFP report, I think you told me this yesterday, but we're probably going to see a sell-off in the stock market, similar to what we saw on that Friday of June 5th, where you had a hot NFP report that gave the Fed the green light to essentially hike interest rates if they need to. I think we would see a similar reaction tomorrow. So if you get a hot NFP report, probably see another sell-off in equities and a higher dollar. And then the opposite is true if you get a softer NFP report. Marco, what are you looking at for tomorrow, man?
So we got Kevin, pretty much a non-event, I would say. So he doesn't want to feed us any breadcrumbs. Tomorrow is NFP. That's going to be the deciding factor. That's going to be sort of a very important NFP, especially for this year. Now that we have moved away from the war, it's back to economic data. And the interesting phenomenon is what you mentioned is a hot print is going to be bearish for the stock market. So a hot print will actually be risk off because we expect the Fed to hike, which would reduce the money supply. Now, a lower print like 20, 30, maybe even 40K would actually be bullish for stocks, would probably be bullish for or bearish for the US dollar. So pretty much a full-on risk-on team, because that would mean the Fed can be more dovish. So it's all about that print for tomorrow. My research is telling me it should come out a bit weaker than the forecast, but you never know. It's pretty uncertain. So I'm not betting on just the NFP print. I'm holding my dollar shorts still, but looking to absolutely reduce my exposure to my short on USD JPY because it's right near the stop loss, and if the NFP goes wild, I could get gapped up, which is not the ideal position. So looking to reduce some of that exposure, but still I'm running a GU buy position. I'm still running some individual stocks. So I'm full on positioned risk on, I would say. What about you?
Yeah, so I think that there's, in the event that you do get a softer number, definitely some softer US dollar. And so I'm kind of positioned dollar short as far as dollar Swiss goes. I'm going to be shorting dollar Swiss here. The first target that I have is going to be 0.8. And at this point here, that would translate into DXY probably hitting this level of support here, this retracement level where you have the 38.2, the 50, or the 61.8. And then at that point, you have an opportunity where the bulls, if the trend is still to the upside, have a chance to reclaim it there. So I'm essentially betting on a short-term pullback here by trading dollar Swiss to the downside, and then I will reevaluate and see what happens at this level. If we get a complete flush of this level and the overall dollar long trade starts to unwind, then I can, move my take profit even lower and just continue riding that wave. But if you get buyer step in here and the trend continues to go to the upside, well, I just take profits around here. And then I could, at that point, if I want to repivot into dollar longs or be patient, it's up to me at that point. Let's go ahead and talk about gold as well, because that's something that a lot of people here in the chat want to go ahead and look at. So I'm going to give you my thought process on gold, and I'll give you Marco, and then I'll allow Marco to go ahead and give you his thought process here. But for those that are newer to the stream here, I see that we have some new viewers here. Let's talk about gold. Let's talk about gold and the reason why it's falling off a cliff here. So gold has been in a consistent downtrend ever since the war started. And for the people that don't know, it has a lot to do and everything to do, I would say, with inflation and the US dollar. So higher inflation means higher dollar, and a higher dollar is better for gold, right? The cost of holding gold becomes more expensive, all that good stuff. If you are able to catch a better yield by just being invested into the US dollar rather than holding a non-yielding asset like gold, money is going to flow into that US dollar and get out of gold. Now, you're in a weird position, or an interesting position here, because the NFP report tomorrow will give us clues as to where the Fed might go with interest rates. So to Marco's point, if you get a very hot print, likely the Fed is in a good position to hike interest rates, and that would continue to pressure gold. And the opposite is true. If you get a cool print, then maybe the Fed can be a little bit more dovish, and that would benefit gold. So that's kind of my thought process here. So to keep it black and white here, hot NFP print, bad for gold. Cool NFP print, good for gold. And so we're at a very important level here, that 4,000 level of support here, where it can go either way. Marco, what are your thoughts for gold? Are you looking to trade it tomorrow for the NFP print, or are you more so spectating on it?
Gold, in my opinion, is in this no man's land. So let's put it on the screen. We are below the 200 EMA, and the saying is nothing good ever happens below the 200, and we are above the 4,000 level. So I would say we're stuck in this box, and until we break out up or down, I'm not going to be doing anything on gold. My bias long term is bullish, because I believe this could be a nice bottom here, and I think the Fed will be more dovish long term. Again, they may do a hike sort of to establish credibility, but the inflation is going to fall. Like oil prices back to pre-war levels. So long term, they will flip dovish sooner or later. That's why long term, I'm also bullish. But if we do break down from the 4K level, I would consider some, let's say, short-term sell setups. I would need a confirmation from the edge finder, of course. I think right now we're getting a bearish print. So let's take a look at that for gold. So if we break 4K with conviction, we're currently getting a very bearish score. So that's completely fine. And then I would be happy to sell gold. By the way, if anyone wants to get the edge finder, basically does all of the analysis for you. So technical sentiment, economic growth, inflation, jobs market, everything is in here. You get a cumulative score. I think there's a 45% sale running right now. So it's the summer sale. and you can use the code Alan. So the code is Alan, or you can use the code Marco. They both work, and Alan and I will split the commission. So if you wanna take a look, if you wanna check it out, I think now is the best time to get in, because I think this is the best sale of the year. Alongside of gold, Alan, what do you like the most? So you're in a dollar Swiss short, or looking to get into that short. What's the next thing?
Another thing that I like too, in the event that the report comes out in benefit for equities, I do like the indexes to the long side. We've had a nice recovery since the war. And I do think that this level of support here is 7,200. It reacted to this level once. I think if we go to pull back into this level here, I think that would be a good position to continue riding this momentum to the upside. I think the S&P 500 I like more than the Nasdaq. I mean, you can see that the Nasdaq here today is down 1%. It's definitely more sensitive than the S&P 500. Also, to the S&P 500 is a little bit more resistance to the AI sensitivity, I would say. The AI names have been very, very sensitive. A lot of people are saying that it's amazing and this is the beginning of the AI run, and some say that it's an AI bubble. So I think if you want to get a little bit some of that out, then I would go into the S&P to take advantage of the broader market strength. So I do like S&P to the long side here. Again, 7,200 or 7,000, where that 200-day moving average lies, would be a good buy opportunity for me personally.
Yep. So when I look at the S&P, I think it actually looks pretty bullish. Let me bring it on the SPY. So the EMAs are bullish in my opinion. We're sitting above the 200, above the 20, above the 10. And the price, at least this week, has been pretty bullish as well. So as long as we can stay above these EMAs, I'm going to be bullish, and I'm going to be looking for positions in some of these individual stocks to let's say, spread out my risk a little bit. I think some of them, okay, we're getting some pretty nice price action on some of these. But yeah, so most of my individual stock picks, they depend on what is the S&P doing. Right now, the S&P seems to be holding up well. And as long as we can stay above those EMAs, I'll be looking for some buy positions on the individual stocks. As far as indices go, I would rather focus on the Nikkei. So a better pick for me personally would be the Nikkei, which right now is pretty close to the 20 EMA. And I'm waiting for a bullish print on the edge finder. So once we can hit that 20 EMA again, get a bullish print, bullish bias here, is going to be game on to get in on the Nikkei. Nikkei has been steadily outperforming the S&P, outperforming the Nasdaq. From my research, the Japanese stocks are really undervalued, so the capital is starting to catch up. The Japanese government is super dovish. You're getting all of the ingredients basically for a raging stock market, and also the yen is losing value, which is definitely an added bonus, an added plus for the Nikkei.
Yeah, man, the indexes seem to be in a really good spot here, and I'll show you this as well. The edge finder right now is showing a bullish reading there, very bullish reading for the S&P 500, and the score just recently improved within the last day, plus 3 points. So I definitely like that. I think the Nikkei is also a very interesting play here. I don't see it here on the edge finder, but definitely no doubt that is a very interesting play, and you've been pretty consistent with that Nikkei play as well. Marco, look at this. So the pound dollar was selling off here when Bailey was kind of hinting at, their weakening growth, their situation here. Now it's starting to see a little bit of a recovery. Me personally, I do think that there's a potential that if you do get that missed NFP report, I mean, look at this. It's kind of bottoming it out here at this level of support. We also did have, what was it, ADP this morning that missed expectations as well. Yeah, ADP missed. It was supposed to be 120K and came out at 98K. So maybe we're starting to see that, and maybe we're seeing some positioning going against the US dollar momentarily. So we'll go ahead and see with that. So congratulations, Marco. It seems like the trade's coming back to how you want it to go. Any other? But you did mention you're trying to reduce exposure, right?
On UJ. So all of the gains that I have on GU are erased from UJ. So, so that's the catch. But
that's the catch. Well, flat is good. I would say flat is good. So
it is. Absolutely.
In trading, I'll take that all day long.
Me too.
But Marco, let me go ahead and pivot out here so you can do your portion of the segment, and then we have Forex James here coming to take over as well. Thank you, man, so much for the conversation. I know it was brief today. We were watching what was going on, what was being said with Warsh and the team.
I had
over
fun
there,
in the comments, so it was fine.
Yeah, I had some fun too reading it, so it was great. We're going to Dubai, I heard, so you keep me updated, man, and I'll go ahead and join you guys. But thank you, Marco. We'll see you tomorrow for the NFP, and have a good rest of your day, man.
See you tomorrow. You too. Thank you. See you.
Alrighty.
So you heard it first. It's gonna be Alan, Ballout, and me. We will be going to Dubai. The schedule will be in the A1 Discord, so if anyone wants to join. I just need to adjust the position here, so give me 1 second. I think GH gapped up quite nicely, so time for me to take half off at least. Let's go to GH close. You see I'm running 37, so I need to close it by, let's do 19. Close, and it should have, okay, yeah, looks fine. So this is still in forward testing, by the way. The strategy is the same thing that that Quagmire guy uses. It's not Quagmire, it's Qualmagi or Kulamagi. I basically heard about him or read about him in Market Wizards, and on his website there's a full strategy. 3 timeless setups, and these are really, really good. So this guy turned like 5K into 100 million only trading stocks, and I'm trying to apply some of his strategies to expand my approach a little bit. But anyways, this is still in forward testing. If all goes well, you will be notified in the A1 Discord, and I will start posting these trades. I'm currently running CAT, which is in some decent profit. I'm running GH, which is in profit. I'm running BRKR, which is in break even. And I have some stuff on the list which I'm looking to scale into, but we will see how that develops over time. I do want to get back to the things that most of you are trading. On the watch list, I have USD JPY. Did someone say something? I don't know. Why is the dollar losing value at the moment? So let me check. Breaking news. Did we miss something from the conference? I don't think so. I mean, the Fetcher Warsh expanded supply would have huge implications for policy. Personally, I wasn't expecting much. So Warsh didn't really wanna give out a lot of information, which I understand. You know, depending on the chairman, previously they tended to feed you some breadcrumbs. Like Powell would say something on a press conference, and then you as a trader, you can use that to adjust your positions. Warsh doesn't want to do that, at least not at the moment. So we're gonna have to wait for the Fed decision, which is gonna be in July. But tomorrow is NFP. It will be super important. So make sure you join our stream tomorrow at, let's see the time, news calendar. I'm in Croatia, by the way, so this timetable is going to be much different. 14:30. So after the NFP report, I will be jumping on the stream with Alan, and we will be discussing this. It's going to absolutely impact my positions. I'm positioned very much risk on. What does that mean? It means short on the US dollar. So I'm doing that by selling USD JPY. I am buying GBP-USD. I'm also doing stocks. So pretty much the SPY is going to be highly correlated with the NFP report. And the interesting thing about the report, as I talked with Alan, if you get a hot print, it will be bearish for stocks, because that means the Fed could hike interest rates. If you get a low print like 10, 20, 30K, that is actually going to be bullish for stocks. If you get a very bad print, negative print, that should be extremely bullish for stocks, because you're going to get cuts, rate cuts, and it should be very bearish for the US dollar. So my GU should fly from that point on. By the way, this was a signal in the A1 Discord. I know this one is losing at the moment, but On GU, I had 2 winners before this one. So I had plus 1.4, plus 1.6, and now we're running, I think, plus 1% on this one. So overall, doing really well. If you do want to join the A1 Discord, the link is in the description of the stream, and you can use the code Marco to get 25% off. So those are my 3 favorite things as far as the watch list goes. The Nikkei, I want to buy. I think this is a super strong story. Okay, comment. Warsh said inflation lower. I didn't catch that. I was too busy commenting on the stream, but I'm gonna do more research on that after my segment ends. But that is good for my positioning. What I'm basically thinking, and you can comment on this. So what I'm basically thinking is oil is back to pre-war levels. Not just that, we are now below the pre-war level. So if you go and fill up your car at a gas station, you will notice that diesel is back to the levels from, let's say, February. I've just been to the gas station, so I know. Inflation, the high inflation in the States, if you look at Edgefinder inflation CPI, this is mostly because of energy. This is because of the war, the spike. So right now, if oil is back to pre-war levels, inflation should naturally fall. So there's no need for the Fed to hike rates. Would you agree? And do remember, before the war, we were supposed to get rate cuts. Okay, is gold moving? Oh, it is a little bit. I mean, this is not, well, on the 1 hour, it is a pretty big move. Interesting. Yeah, so gold bouncing off of this level a little bit. Anyway, do remember, we were supposed to get rate cuts in 2026 before the war. And now we have 2 rate hikes priced in. I think that is too much. I think that's over-exaggerated. I think we actually keep the rate the same, or we may even get a cut at the end of this year. So that's how I'm positioned in the markets at the moment. I do want to hear the opinion of the viewers. So in the comment section, write down dovish or hawkish. So I want you to think about it. Are you hawkish or are you dovish for the Fed by the end of this year? So Fed by the end of 2026. So let's get a read on that. Let's see, dovish, 2 dovish prints. So I'm going to wait a bit until we get some more comments through. Dovish, DXY hammering nicely. Well, that's definitely good. I mean, the Warsh speech was important, but the more important part is the NFP tomorrow. Okay, the NFP tomorrow will be much more important. The EU member gave hints because she said we're aligned with the US, and she said more possibility on inflationary first, then deflationary means both EU and US are dovish, then hawkish later. 100% dovish. There was a hint from Warsh. Dovish. Okay. Well, that is good. That is in line with what I'm thinking. Now I do have 1 more minute, and then we have James coming on. I want to mention, if you're looking to get funded, do check out Ola Prime. So Ola Prime is 35% off with the code A1 Live. So Ola Prime, really good new prop firm. They have amazing Trustpilot reviews. They don't have a consistency rule, so if you're a swing trader, this is for you. And with the code A1 Live, you get 35% off, which I think gives you the best price, much, much better than, let's say, FTMO. So do check that out. You can catch me tomorrow. I'll be streaming at, let's see the schedule. Live stream schedule. Definitely do tune in tomorrow. It will be very, very important what happens tomorrow. Tomorrow is gonna be 9:45 Eastern Standard Time. Okay, so a little bit after the NFP, and I'll be streaming with Alan. I think that NFP will give us even more clarity. We got some chatter from Warsh. At least it looks like that we got some chatter from Warsh. But the NFP print, will it print hot? Will it print weak? Personally, I'm forecasting a weak print. That's how I'm positioned. So if that happens, I will be. My positions will be doing well. I want to wish you a great rest of the day. I'm going to tune out now, and James will come on in like 20 seconds. So thank you. See you in the next one. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello. Happy Wednesday, ladies and gentlemen. Hope everyone is well. So we're getting headlines in from Warsh. Nothing overly interesting, to be perfectly honest with you. We are getting Fed Chair Warsh. We've looked around to see the prices are too high. Expectations of inflation over the next, over the first 4 weeks have come down. Supply side is solid. What else have we got? Not that much. Yeah, that's kind of it, actually, in terms of interest. We did also have two pretty credible sources come out saying that they're expecting pretty solid jobs numbers tomorrow from NFP, unemployment, and average hourly earnings, as well as no revisions lower on previous releases. So I think that was Besant and Hassett that they both came out and said that. So we'll see. But so far, it's not looking overly interesting. The dollar is down, actually, at the moment. We are seeing gold having a spike to the upside, as well as all of the other dollar pairs as well. Pound dollar's up. Australian dollar, US dollar is up slightly. New Zealand US dollar is up. Gold's up. And silver is up, as well as euro dollar that's also having a little move higher. But nothing that's really interesting to me at this time. Dollar sell-off this week? Yeah, maybe. We'll see. I'm not really too interested. I don't think the dollar is in a position really to be weak right now. I think Warsh can talk, but I think really we're going to pay attention to the data until the data is very obviously aligned. So at the moment, as we spoke about yesterday, the US fundamentals are still really strong. There's nothing bearish here for the dollar. The only thing that could really change this at the moment is tomorrow's data. We did actually have data come out today, which I can't remember what it was, but something wasn't great today. I can't remember what it was off the top of my head. But either way, NFP is, again, expected to be pretty good. Unemployment is expected to be fine. Average hourly earnings is expected to be okay. So even if they're not, even if they don't beat forecast, I wouldn't expect those headlines to be a big shock to the downside, if that makes sense. So I'm staying bullish on the dollar is what I'm trying to say, until I've got a reason not to. So my personal bias is bullish. The Edge Finders fundamentals are bullish. The technicals, in my opinion, are still bullish. So yeah, I'm going to use the downside on the dollar really to try and leverage some sort of entry in. So I've got a pending order on euro dollar at 1.15. This has been active for about a week now, and it's obviously just not hit. So sat on the sidelines a bit, but what can you do? Not much. Still in the DAX, so German 40, not really anything going on here. We did have a nice run to the upside yesterday, but since then it's kind of just been range bound. Just kind of a little bit of sideways. Euro Swiss also remains sideways, but this is a pretty decent swap trade, so I'm quite happy to sit in this one. But yeah, nothing going on really in terms of anything interesting. And I was trailed out of Euro Yen. So some of you who were here yesterday will remember that I was long Euro Yen. I think it was around here. So we trailed our stops to around here. We got out for about 0.2%. Really uninteresting. Again, I know I keep saying that, but yeah, there's nothing that I'm excited to show you today. It's just a very boring day-to-day type of situation. What did Warsh say? Hold on. Let me pull it up for you. Bear with me for a second. I'll close the tab. Here we go. So these are some headlines that are coming through Warsh. I'll leave those there for you for a minute. Nick's stop loss got hit on gold. Nick had a phenomenal run on gold. I'm sure he's not too upset about that. Yeah, what a beautiful trade he had there. Is ADP? Yeah, no, we had something else, but I think, I don't know. I'm having a little bit of a brain fart. Gold and silver's ripping EU. Yeah, we can have a look at we can have a look at those. So on the Edge Finder, things are still very plain and simple. So we're still looking at buying dollar, and we're still looking at selling dollar pairs. Now, something that we are looking at, or something that I'm looking at here, is this one-day change. So the dollar has actually lost 2 points of its score. So obviously it was 12, it's now down to 10. Euro dollar was actually at 15 1 or 2 days ago. It's now decreased to 13. So we are seeing a little bit of a deterioration within the trade ideas. However, they're still very relevant and prevalent. So again, as I said, I'm not looking to really do anything. I'm quite happy to stay with the pending short order I've got in euro dollar, and that's it. I'm not looking to get overly heavy, especially right ahead of tomorrow's news. And the fact that the dollar is giving back some of its gains. So I'm not eager to jump in, but I'm happy to stay with the same bias for now until I've got a solid reason not to, as I said earlier. PMI, that was it. Yes, you are correct on that one. Cheers, James, to close it up. No problem at all. I'm not sure about Nick's trade. I don't follow. I don't follow them. So I know he trails quite tightly. So maybe. Excuse me. Closed the DAX long yesterday and a gold long. Very nice. Trader Gareth. So yeah, I mean, I think Marco caught a really nice position, actually. I'm in the A1 Discord. I saw Marco send the GU buy position, and I was like, the reason's good. I didn't necessarily disagree with it, but I was like, the dollar is, pound dollar is down. It's not, I personally, for the way I trade and things, it doesn't align. However, I've been proven wrong. So well done to Marco if he's still here. That was a really nice trade. So yeah, I'm still happy to go short though. So with pound dollar specifically, I really want to see this level come back into play around 1.332. That would just provide, we've had the break, looking for a retest and a continuation lower. Now, the problem is we're actually very close already. Am I going to be able to get in before tomorrow's news at a still pretty reasonable price? I don't think I am. So I think, and it's annoying, but I think I'm just going to have to sit out. Yeah, it's been quite uneventful over the past week or two. I've had, this really good trade in euro dollar, and that's it. That's really all I've had. I've had a couple of attempts here and there, but nothing really has done anything. Like euro yen, for example, did really well. It was up about 1% yesterday, and then it came all the way back and stopped me out for 0.2. So it's just a bit of a frustrating time for me at the minute. It's not like how do I explain it? It's like annoying in the terms of it's not like a losing period, but it's also not a winning period. It's just I'm just not finding anything. Nothing is doing much. Do you know what I'm saying? So it's just a patience game, which I'm not really a fan of. Anyway, oil is down. Marco, yeah, no problem at all. Props where it's due. So oil is down, almost filling the gap that we had on the announcement of the US and Iran situation, but yeah, not quite there. So regarding the Iran situation, I've seen two headlines come in earlier today. One was about Trump being Trump being briefed on a all-out war plan. However, that wasn't like this is happening. It was just that was a brief he had. And then another headline from someone, again, I can't remember who it was, but someone saying that it's extremely likely that it's not going to continue to escalate. There's some sort of peace deal or some sort of meeting or something that was going to happen. So I wouldn't expect any serious escalations, to be perfectly honest. I'm quite happy to stay with what I've been saying over the past couple of days, which is the market isn't overly interested in Iran at the moment. I think we had a lot of that situation priced in. And it was more a case of, we got headline after headline causing a lot of chop. And then we had a new emerging driver, which was, the dollar strength we had over the past couple of days. So I've got no interest in trying to trade Iran or really pay much attention unless we do get some, serious escalation. Then obviously I'd have to pivot. But for now, I think we continue as normal, day-to-day business. Talk about Trizar, ball out. Hold on. It would help if I could type Trizar. What do you want me to talk about here? I think, you know what, maybe a mean reversion. I think maybe we should be buying this dip. Maybe. I don't know, actually. No, I'm joking, by the way. I don't think actually any of us could get in on retail brokers. Even if we could, it would be favorable for us. But yeah, it's the same market. It's the same as dollar try. I put a tweet out actually the other day saying, if you didn't buy dollar try at 20, are you even a real trader? But yeah, it's funny because you look at these markets like, wow, if I just bought, it would have been so simple. But unfortunately, it doesn't work like that because the swaps are awful. And obviously, you can't really get filled as a retail trader anyway. In fact, I don't even think we've got options. I don't think there are retail brokers that will allow you to get into dollar try. There might be a few like interactive brokers, maybe, but I'm not sure. Fed Chair Warsh Q&A, Sintra, no secret I wanted the balance sheet to be smaller. Should defend on rates. Yes, that is the thing. I don't think really anyone expected Warsh to come in super hawkish, which is another factor I think behind the dollar strength. It was more of a little bit of a surprise. Obviously, we kind of expected they might have to pivot a bit more hawkish due to higher oil prices and the inflation dynamic on the back of that. But I think it was a bit more than what the markets expected, obviously driving that strength quite significantly. So yeah, I think with the de-escalations, I think actually, again, Marco said it quite well. I think eventually it's a little bit more sensible to expect the Fed and other central banks to start pivoting back to where they were. Because if we do have, obviously, the Iran catalyst causing central banks as a primary driver to pivot a bit more hawkish, or at least back to neutral from dovish, and then that situation then obviously comes back or dissipates, then there's no reason to stay on that side that they were. Of course, it's not quite that simple. There are obviously other bits of context and nuance like labor growth and things, but yeah, to keep it simple. Buy some euro dollar. It's a bit tricky at the moment. I'm still bearish because that's what my plan is saying. So, the trend is bearish, the edge finder is bearish. My day-to-day framework is still telling me to be short. However, I am a little bit cautious. Obviously, we've had Warsh out today, and then we've also got labor data tomorrow. So we've got average hourly earnings, unemployment, NFP. So that could sway it a little bit. So if we do see deterioration in the labor market, as well as inflation expectations coming down, we might see the Fed lose some of that hawkish stance, and then the dollar lose some of its advantage that we've been seeing. So there is aspects of that. We are also seeing some banks actually having a little bit more of a bullish bias on euro dollar as well. Nothing major. There's nothing I really want to speak on that, to be honest, in terms of there's nothing particularly informative, but something I'm keeping in mental note of. What else do we have here? Wait, hold on. The chat's moving a bit quick. I'm not very good at reading. Take a strangle with iron condor butterfly on it. But like that looks to me like you pulled out a dictionary and just typed in random words. I've got no idea what that means. I know it's some sort of options play. That's all. That's about it. As far as my knowledge goes with that stuff. What do I think about Bank of Japan intervention? Every intervention was weakened the previous one in history. I personally don't think it will happen. Even if it happens, it will have big impact. Well, it depends because it depends on how big the intervention is. Obviously, it could be extremely minor. It could be a small quantity that they intervene with and get into the market with, which obviously would be a smaller move, or it could be a large one. It could be something like this. There is no way to tell, and this is one of those things. I think there are definitely valid reasons to be short dollar yen. But I would say it's quite a risky play. I think if you were going to go short, it would be more a case of you would have to go in with the full expectation it's going to hit stop loss, but with still obviously that reasoning to back up why it could work. Do you see what I'm saying? It's like any trade, but I think it's just a bit more risk and a bit more expectation of a stop loss being hit. So, excuse me, less risk, less aggressive, and more just seeing will they, won't they, more of a play. But again, that's my opinion. I don't really like trading the yen. I don't really like going short on the dollar unless, again, there is that specific reason to. DXY pump, gold pump, treasury pump. What's going on? Well, not necessarily, actually. Let's see. Yeah, I mean, gold is pumping. Dollar, not so much. The dollar's having a little bit of a hard day. Again, nothing incredibly significant, but it is down a little bit at the moment. So it does feed into, obviously, the gold upside. There is also, and please fact check me on this, don't take this too literally, because it's something I heard on like a YouTube mini documentary video. So it might be inaccurate. But something I heard that was quite interesting is China has basically stopped leverage trading on gold. It's not completely banned, but they've increased margin requirements by 140%. Excuse me. And the reason they've done that is because they want to see what the true value of gold is. So there's a whole thing. It would take me like half an hour to explain the whole thing properly, but you know, there is an idea that actually central banks are buying significantly more gold than what the average trader or the retail public know about. So there is the argument, actually, if we do see the dollar start to weaken, you know, we get worse labor data coming out, we do see the Fed pivot a bit more dovish, we could maybe get some really nice buys on gold over the next, 6 months, year, 2 years, 5 years, whatever your time horizon is. Because, you know, theoretically, and this is a big theoretically, this could be a really nice low to buy from. However, at the moment, again, I don't want to get ahead of myself and give anyone the wrong idea. At the moment, I do still think gold is bearish, and I think 3,500 is a reasonable target to have. So keep an eye out. Obviously, it's a case of if this happens, then we look here. If that happens, then we look there. You see what I'm saying? It's trading 101, really. But I think that's kind of the play I'm looking at, really. If we do see the US data start to crumble a bit, I'm going to look to buy gold. I think it's a reasonable discount, really. I mean, considering if we look at the weekly time frame is still very bullish, and it does look like a reasonable pullback. You know, obviously on the 4 hour, the daily, gold has had an absolutely terrible time. But when you zoom out, it actually doesn't look too bad. This looks actually quite healthy. You know, we were constantly overbought on the RSI here, and now we're actually oversold for the first time in, 2 years? So maybe this could be a case of, oh, we just had a bit of a mean reversion, and now actually we could continue up towards 6,000, maybe. Again, don't start buying gold based on that, but it's just a theory, an idea. Bitcoin prediction. Interesting question. I don't trade Bitcoin. So I like to do a bullish and a bearish outlook on Bitcoin because it's not something I fully understand. I don't want to take one side and someone take that as me trying to say that I know what's going to happen. You know what I mean? So I think really it's a case of what happens at this level. You know, this is a really strong weekly, daily, monthly level on Bitcoin. So I think, again, if we do see the dollar start to deteriorate a little bit, maybe we could start seeing Bitcoin climb back up. I think this is a fantastic level that longer term investors will be looking at on Bitcoin. I don't think anyone could really disagree with that. However, if things continue the way they are, if we do get good labor data and we see the Fed maintain or even increase their hawkish stance, I think it's very reasonable to expect Bitcoin to start heading towards 45,000. Obviously 50,000 first, then 45, and then maybe 40 after that. But as I said, I want to make it really clear. Bitcoin isn't something I'm well versed in. It's not my area. So do your own research, as you always should anyway. Cattle futures to the moon, again, not my area of expertise. I'm not really a fan of cattle. Thoughts on Euro Aussie? Now that's something I can give you a bit more of an answer on. So let's actually see. We've not really used the Edge Finder so far, to be honest. So let's see what Euro Aussie is, first of all. -1. So actually, I wouldn't mind having more of a bearish bias. Obviously, it is -1, so technically more bearish leaning. However, I don't like to really pay attention to technical signal because I find my own way of finding that. So I've got my own way of finding that. So economic growth being bearish and jobs being bearish is actually quite nice. The only thing really missing from my pillars is inflation. So maybe, I don't know, let's see, what are we looking at here? So weekly is broken below the 200. Daily looks quite bearish, which is good for our idea. The H4 is looking bullish. So I suppose there's two ways we could go about this. We could either use the daily as just the execution time frame. And what we see here, really nice rejection of our 61.8 fib level, obviously an engulfing daily candle there, or almost engulfing. And then today we failed to catch a bid with quite a large wick to the upside. So there is maybe an idea here of being actually just short from market. So something like this. Or if we want to be a bit more conservative on a shorter time frame, we go to the H4. And in this case, I would need to see the moving averages break and then a new downtrend begin. So yeah, it depends. If you want to be a bit more conservative, then yeah, I'd say the H4 is a little bit better. Wait for that change of trend, and then it aligns with the daily, and then you've got the sort of alignment between time frames. That makes a bit more sense. But again, daily does actually look quite nice to go short as well. But Bitcoin is already crossed 59K above. What do you mean? Bitcoin's direction is down. Ball out. I can't disagree with that, to be honest. I personally don't like it. And this is some, actually, hold on before I start yapping. Okay, I think I've got about 10 minutes. Yeah, Bitcoin's something I've never really gotten behind. I've got some money in Bitcoin, but it's more just a little attempt, you know, some money I don't really care if I lose or not. But it's odd because I've never seen any value in it. You know, I've gone through, what, 28 years of my life. There hasn't been a single second of my 28 years on this planet where I've thought I need Bitcoin or I can't do something about Bitcoin. It's actually more of a hassle. You know, it takes longer to transfer than just doing a bank transfer in the UK anyway. I'm not sure. America's a bit slower. Everything about it is just inconvenient for me anyway. It was like a hassle for me to have to use Bitcoin for anything. So I just don't, I've never needed to. So, you know, for an average person, my perspective is it's completely useless. Obviously, you know, you could look at it as an inflation hedge and a fiat currency hedge. I get all that, but I'm talking day-to-day life. For an average person, again, it's just not that useful. Especially when you got people, you know, that buy gold in the S&P. There's other ways around the sort of inflation idea. Okay. Oh, there's news. Oh, my bad. I've been really. What were we looking at? Forex Factory. Hold on. Forex Factory. What have we missed? What have I missed? I'm not on it today. I do apologize. Let's just do a quick check-in. What we've got today. What time is it? 3. So yeah, manufacturing PMI missed 53.3, down from forecast at 53.8. Not a huge deal in my opinion. I think that's still reasonable. It's above 50, which is good. That's a big thing I like to pay attention to. However, it is still a miss. And then we obviously pair that with ADP, which also is a bit of a miss. It's not looking fantastic, but it's not a huge deal. Final manufacturing PMI missed at 53.9. ISM manufacturing prices also missed at 73, down from the forecast at 77. So yeah, it's not been a great day for the dollar, but I also wouldn't call it detrimental. We've had some misses, but again, they're not huge misses. I think really the main focus is tomorrow's labor market data. Hold on, US dollar Swiss analysis. Okay. I don't think I've really got much for this market on my personal bias. So I think realistically being a buyer actually does make a little bit more sense. Actually, I'm just looking at this weekly time frame is down quite significantly. Daily is looking quite nice. So daily has cleared the highs. It looks like we're about to start a new daily trend. So the daily looks okay for some potential buys. The H4 looks really nice to go long. You know, we've got a really nice established bullish trend here. And then we've got some pretty decent swaps to be a buyer of the dollar Swiss as well. So, excuse me, I think something like this could be warranted. Or actually, if we went to the daily time frame, it would look a bit more like this, I think. So yeah, I think, yeah, I don't mind something like this. So wait for a pullback into the fib, wait for these moving averages to cross and look for basically just a trend continuation type play. I think that's straightforward. And obviously you'd be banking on dollar dominance to continue. But again, it really relies on what's going to happen tomorrow. I'm putting quite a lot of weight on it. Some people may, some people might not. But for me, it's quite an important factor to say, do I still want to be as bullish as I was previously? Which news is more important to watch? Well, you've got the big three. So you've got inflation, growth, and labor. So CPI, PPI, PCE for the US. Excuse me. Then you obviously got unemployment claims, jobless claims. You got NFP. Average hourly earnings, you got those ones for labor. Then for growth, you got GDP, which is obviously a big one. So they're kind of like the core pillars. But then from those, you get it feeds into central bank, which obviously FOMC, forward guidance or press conference as well. So they're kind of like the main ones, but there are obviously other things to pay attention to. But hey ho. Late for the show. Hi guys. Dreaming. Good to see you, my friend. Hope you're well. Australian dollar CAD. Yeah, so Australian dollar CAD is a little bit of a tricky one for me. So I don't really like the Australian dollar at the moment. I just don't see much of an edge in trading the Australian dollar. I think you could go on like the rates aspect. They do have pretty high rates relative to their peers. So there is that side of it, but I also really don't like the Canadian economy. I wouldn't want to hold the Canadian dollar as a buyer. So it puts me in a tricky position because obviously when we're trading, the whole point is finding relative strength. I would say the relative strength here is within the US dollar, but again, I think, excuse me, I think it comes now down to opportunity cost. Yes, I think the Australian dollar is stronger, so I would lean more towards being a buyer, but if I took Australian dollar CAD, am I then going to miss out on opportunities that are actually better, like, for example, euro dollar, gold, and whatever else there may be? So, yeah, maybe a buyer, but again, I just don't think it's strong enough for me to be interested. Can we see the update on the Edge Finder? I'm not sure if the Edge Finder will have updated just yet. Let's see. So what date is it first? It's not updated just yet. It'll probably be here in an hour or so. So the Edge Finder is likely actually to tick down. Obviously, it's 100 right now. It'll probably tick down. Actually, I've got no idea what it'll tick down to. Maybe 90 something. I don't know. Where are all the stupid sellers saying that was a big sell coming? What do you mean banging ears? Do you mean on the S&P or what? Actually, I've not checked the S&P. Should we see what's going on? I've got a couple of minutes spare. I guess we could do a review. Yeah, it seems like actually they've recovered fine. Obviously, today's data has been a little bit of a positive impact as well. So, oops. Yeah, I wouldn't want to really do anything. I think obviously being a buyer, this is what I've been saying. I think being a buyer is the easiest way to go. You know, first of all, you're following the drift, the natural drift of these markets. But I'm still a little bit cautious. I sound like a broken record. I've been saying this for a while, but I do think it is very stretched to the upside. Not necessarily on like an overvalued side, although I do think stocks are overvalued. But I think on like just technical wise, it just looks a little bit extended. Then obviously if the Fed continues to be hawkish, we get decent data out tomorrow by the labor market. It might be a little bit of a difficult one where it starts to deteriorate a little bit. However, you know, it seems very resilient. I think that's a fair way to say it. You know, we had risk-off sentiment down here when Iran was going on, and then the market just rallied from there, and it's continued really, a bit of a consolidation period, but overall it's very resilient. So, excuse me. Again, it puts me in a position where I think being a buyer is easier, but it's just not as clear really as I would want it to be. I'm fairly sure actually the indices are bullish as well. Yeah, so the S&P actually is very bullish. So if we keep it simple and keep my personal bias away, I think being a buyer is actually a lot more really where you'd want to be, not financial advice, of course. So in this case, I think just waiting for a pullback towards 50% retracement would be reasonable. But then is that likely to happen? I don't know, is obviously the answer to that one. So yeah, I would say actually, I know I've said that I think a few times now, but I think I'd need to see these highs get broken on the left, a new high get printed, and then the next pullback, then I could look to be a buyer from there. I think that is kind of the easiest approach really. Okay, ladies and gentlemen, my time has come to an end. I need to leave you all. Well, I'll love you and leave you. Guys, we have got, let's just double check who it is so I can hand over. Tiger. We've got Tiger coming to take over the show, ladies and gentlemen. So have a fantastic rest of your days. I'll see you all tomorrow. Thank you for being here. Don't go anywhere. Stay safe and don't get magic called. See you later.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here, coming on to close out the show. Happy hump day to everybody out there. Hope you're doing well as always. Yeah, definitely take advantage of Nick's code, A1 Live, if you guys are looking for another prop firm. The QR code should be on there as well. So definitely click that if you are interested. They got a whole revamped set of rules on there. They've upgraded a couple of rules of late that have actually making it more trader friendly, I should say. So definitely some good stuff going on over there. I've got an 100K account with them, two-step prime, and I'm just absolutely loving it because of mainly because of TradeLocker. I can't get over how awesome it is. But anyway, we did obviously just have that data coming. PMI data. We did have a little bit of a miss by 0.5, still comfortably in expansionary territory, guys. So we will finally see a bearish box on the US dollar whenever it gets populated over here. As you can see, the previous one was bullish, 100%. We'll get a little bit of a change, but it's still going to be overall pretty strong. So don't let one negative piece of data fool you. It's pretty good overall when we take a look at it from an aggregate view, which is really what the top setups is on the Edge Finder, guys, looking at things as an aggregate, not just isolating or singling out any one item. So get you an Edge Finder as well. I think Nick's got some really cool discounts going on as we speak. I think it was 40%, if I'm not mistaken. So definitely, if you've been waiting, if you've been on the fence, there's no better time to get it than now. So definitely get you a copy of that. But when it comes to the dollar pairs, I mean, this right here, the dollar index, that's where the report was released. Your dollar base currencies on the bottom left here, your dollar quote currencies on the top. So we haven't really seen a big movement either way. A little bit of a decline for the dollar as expected. But again, guys, that's just more reaction to the negative data. But at some point, I mean, I feel like the overall aggregate's going to step back in and give us some, a continued boost to the upside. So anyway, that's just one piece of negative data. But hey, we had a nice run. A week and a half at 100%. Something I haven't seen since I've had the Edge Finder is the dollar, the currency at 100%. But the time has come to start introducing some more red into the system. But anyway, guys, let me know if you have any specific tickers or anything you guys want me to check out. We can definitely do that. Hey, Tiger, are you in any trades? Asked Christian. Yeah, I'm still in that. I'm still in that pound dollar short. Real close to gold, though. I gotta say, we've been talking a lot of gold lately. We are pretty close, and I want to tell you guys what I'm doing with gold, actually. Let's see here. Yeah, just the pound dollar short. So yeah, that's still that one, guys, I got in last week to fulfill the $30 or the 30-day requirement. So so that remains the only one. Okay, so for gold, we talked about the the couple daily 4-hour zone confluences that I was keeping my eyes out. This one obviously was a miss because it took out this 4-hour zone ended up catching price and pushing it down. Recreated a new daily 4-hour confluence. And on this confluence, if I go to a 1 hour, we've actually got a 1 hour candle as well. So we're basically looking at a 1 hour, a 4 hour, and a daily with a gap. With the gap, guys, the acceleration gap, just showing that supply is heavily exceeding demand, and therefore there's some underlying strength up there somewhere. So, there's really a few different options on how to take this. We could obviously short on the daily. We could short on the 4 hour. We could short on the 1 hour. I'm probably going to go ahead and stick with the 4 hour just because I'm tired of missing trades by like 5 pips lately. But it is nice to know that there is a 1 hour confluence just ahead of it, that white line that you see right there. Now, what I'm looking to do is utilize silver as kind of a confluence play. So you can see we've already went through this 4 hour supply. We've already got a little bit of a bounce from it. Now we're retracing it. Well, on silver, we have a very similar 4 hour supply zone in this very same spot. So if I flip to silver, you can see right here, we got the same thing with a daily 4 hour ahead of it. So it's kind of the same way I like to use the currency indices. Like if I'm short pound dollar, well, I want to make sure the pound is the pound index, the BXY, the BIXY. I want to make sure it's bouncing into a supply area of its own while the dollar bounces into a demand. So I can get that extra confluence. So I'm kind of using the same logic with gold and silver. So I'd like to see price continue up and bounce into this supply on silver while gold bounces up into this supply a little higher. It's two different zones, but the point is it's two different bounces. It's two different spots in price where supply heavily exceeded demand. So that's just kind of a confluence play I'm looking. This one obviously is old news. This one's fresh news. This is new news. And silver has yet to bounce into any relevant zones yet, but it's getting close. It's not close. It's not far at all. So I would love to see silver bouncing into this zone, and then very shortly after, or at the same time, or whatever. I don't care. I'd love to see gold hit the supply zones at the same time. That would greatly influence my confidence in this possible short. So that's probably the main thing I'm looking at right now. Gold obviously continuing along with silver to give us those bearish looks on the top setups over here. Now the PMI data will give just a tiny bit of strength to gold and silver, right? Since it's bearish for the dollar, it's a little bit of strength for gold, very short term. So I like that. I like that that's bullish for gold because perhaps that'll give me all the strength I need to get price to push up into the zones to where I can then take the other side of it and short it. Okay. So that's one thing I love about this data coming out positive, because overall, you guys would agree the dollar is still strong. That one piece of positive data is not going to affect gold as far as bullish or bearish. It's still going to be bearish. And I just think that that'll be a pretty cool little confluence play between the zones on gold, silver, and then the data, the data points as far as the PMI data goes. So that's kind of the way I'm looking at that. What are your thoughts on shorts on Kiwi Swiss? Okay, let's take a look at that. Kiwi Swiss giving us a bearish -6. Pretty good crowd sentiment data favoring that. So that would tell me that the average retail trader at home on their computer, their smartphone, is long, net long. So that is a contrarian signal to the downside. We've obviously got bearish trend, bearish seasonality. You do have a few blue boxes over here for interest rates, unemployment rate, and I think that CPI. But other than that, there's a lot of red and a lot of neutral. So let's go take a look at that. Okay, so silver just hit that supply zone. That's what that alert's for. Now I just need gold to climb a little higher and bounce into this zone. Okay. As we can see, silver now bouncing in. I just need gold to go a little higher. That's all I'm asking. Just go a little higher. But anyway, Kiwi Swiss, having a look as always, guys, especially if it's something I haven't looked at in a while. I always want to get my daily on the right, see where my swing lows, swing highs are, my series. In this case, it looks like we've got some downtrend going. This is another one of those messy currency pairs. Like I think yesterday I was telling you guys about pound Swiss, just as an example. That was the example yesterday, where you got just wicks everywhere, okay? Knees and elbows, wicks and bodies everywhere. It's pretty ugly price action. I don't like it. I hate it, in fact. But at least we broke a structure, a daily structure right here. Okay, so that is one good sign that I do like. Let's go do this. I gotta have my items right. So we broke that structure there. We did break a gap down here on looks like Monday the 20th. Haven't broke this major structure yet, but this was a pretty strong structure at one point. Followed by a yellow candle on this leg up, this leg out, strong gap, broke some structures. Look like a triple bottom if you zoom in on that a little more, maybe even a quadruple, however you want to look at that. So at one point, this structure was pretty decently strong. And that's the structure that we have now broken to the downside. So remember, it takes a lot of money to break a structure. And then it takes a lot of money to break this structure. So I like the structural breaks for the short, your short idea. As far as the 4-hour chart on the right or on the left, looks like I've got a zone a little bit higher up that I'm kind of keeping my eyes on up here. We could run into a little resistance here, but the thing about this area is, and I don't remember the exact currency pair we looked at where I mentioned this 2 days ago, but I was telling you guys, it might have been this one actually. Oh yeah, this was it. I told you that this looks like it might be a daily supply, but we've already wicked in on this candle. There's not a very strong leg out. That's like weak as it gets. There's no volume increasing at the bottom. So I'm not going to look at this as a daily supply for a number of reasons, but especially on a 4-hour, because that's just way too many candles in this basing area. Way too many candles. That's like 3 days worth. You think a bank has enough time in 3 days to possibly distribute, since this price dropped, to distribute their order if they had accumulated a lot from a price point further back? I think that's probably plenty of time. So I don't like this area to short from. I don't think there's going to be, or I don't feel like there's going to be a ton of unfilled order potential there. But if we go a little higher up, I do. Because now we're getting a little higher on the curve. Pretty strong gap coming out of that. We broke this structure right here, right there. So this supply zone had the strength to break structure to the downside. It did retrace, but it kept going and then just continued down. So that's why I put my alert up here at that 46, 42 area. And as you can see, we're a little ways away from it, to the tune of about 40, a little over 40 pips. The ATR on this thing, guys, is absolutely horrendous. Okay, this thing only moves 26 pips per day on average. That you see that red number at the bottom right, 261. So remember, the decimal point is like 1/10 of a pip. Just imagine it that way. So 26 pips, that's probably one of the weakest currency pairs out there. It just moves like molasses if you stuck it in the freezer for about a month, right? So it could take forever, that 40 pips, just to even get up there. But if it does, hey, Edge Finder likes it for a short. You're going to have some liquidity above this area. There's definitely going to be some liquidity over here, which is going to be what? Buy orders, right? So these shorts that had the strength to push price down, break structure, they got to put their stop losses somewhere. So I would anticipate they'd be putting it somewhere in this area. And then I personally would want to give it a protective stop a little bit higher up, just to account for whatever liquidity, account for however big that range is on this liquidity right here. So that's probably what I would be looking at if I were trying to short pound Swiss. And you do have also, let me go back in time a little bit. Okay. Yeah. I don't think this is relevant anymore. This old former support resistance. Again, it's a pretty choppy currency pair. This is probably the least traded currency pair on my list, mainly because of how slow it is and this puke fest right here. But hey, not saying I won't short it. If we can get a little temporary strength to push price up, Kiwi and Swiss might be a possible play. We'll just have to find out. what is Kiwi Swiss looking like? So Kiwi is 57%, Swissy is 71. So Swissy is a stronger currency. So it makes sense in the realm of, buying strength in the Swissy and then selling, I would say, neutrality for the Kiwi. So it's not like the Kiwi is down here under 40%. It's pretty well neutral. So anyway, yeah, hope that helps. I don't think there's anything in the immediate area for me personally. That might be a good spot for you to look at. 4170 is a good point to short on gold. Let's go back to gold. Let's go find a look. Have a look. 4170. Yeah. Yeah. I mean, again, guys, I can't emphasize it enough. Definitely not a financial analyst, but I'm interested in it. I'm very interested in it for all the reasons I outlined just a little bit ago. Confluence points, multi-time frame confluence points, gaps on all three of those time frames. I like it. Really do like it. So, but anyway, yeah, that's gold, silver. Oil, it's chugging along. It's chugging along down to down close to that pre-war level on WTI. Now Brent has already touched the pre-war levels. And I guess I didn't save it. Okay, we're already down to the pre-war levels on Brent right here. So there's our daily Brent. Closed the gap over here. We're just looking to close the gap on WTI. The same picture would be true on Brent that it is on WTI. If I'm trying to buy this, it was on Edge Finder. I think it's fallen off, but I would still have to see that series of higher highs and higher lows on a daily, on a 4 hour, before I personally would have any interest whatsoever in getting involved. So exact replica of WTI, except WTI, we're still trying to close the gap. So no play at all on gold or on oil, whether it's Brent or WTI. Yeah, Bitcoin, it's still just continuing its trek downwards. No real interest in that, just like oil, unless we start turning around. At least prove that you're trying to turn around. That's all I ask, because that's half the battle, is when price is telling you, hey, I'm trying to turn around, go back up. At that point, that's where we can use educated guesses to where to buy some retracements into zones of demand. So yeah, still nothing over there at the moment, guys. As far as your indices go, go have a look over here. In fact, I need to get an update. So Dow is still up there, NASI, and S&P. Okay. So overall, S&P and NASI, they've been pretty well getting a little lazy over the last few weeks, unlike the Dow, which just continues its upward trek. So, again, you had the sector rotation. So basically, when it comes to index trading, the old heads are kind of winning. Okay, the old heads, the Dow, the old money, it's continuing its trek upwards. It hasn't really got a whole lot to do, or near as much to do, with the sector rotation that the S&P and NASI had. So one of the plays has already been made over here on the S&P. I was keeping an eye on this demand for a short while. I just got scared off by it because of the fact it had bounced into recently bounced into this daily supply up here. Daily obviously being bigger than 4 hour. I just wasn't quite feeling it, but it made a liar out of me. Now, if it would have done what I asked it to, which is break this structure first, I would have been all in on this zone. But because it didn't, and it just bounced directly from the zone, the daily supply, that's why I skipped this trade. But hey, guess what? It's still making fun of me. It's still bounced. It's still getting that push to the upside. At the end of the day, the data works, top setups works, and it's going up. Kind of a similar picture over here on NASI. Exact same picture, actually. I was looking for this break of structure, never got it, and it just retraced from there. So I ignored that one as well. I was more interested in the Dow to begin with. Again, the old money, not having as much worries about the sector rotation. I'm still keeping an eye on this very same demand at 50,411. I don't want to personally get involved in any of this nonsense up here because it's high on the curve, number one. Number two, just not really that many great great candles, great expanded range candles. Now we had this one right here, but as you can see, it had bounced into this supply. I just didn't draw it up. See that supply right there? That right there is part of the reason, another reason why I had no interest in buying right here. But Still worked out after all, didn't it? Still worked. Okay. And also that was a small, that was a 30-minute zone anyway. So that was a 30-minute zone. It was a very strong zone. I should have probably taken a little bit of stab at it. But again, when you bounce into zones that are bigger than the zone I'm trying to buy from, I typically try to stay away from them. But look at that. Look how beautiful that wick in was. Beautiful wick in, and it's already made it close to what would have been a take profit up here. So still waiting on that bigger retracement. What else you guys got? Bro, I'm holding the gold in physical form. Is it a good idea to sell it now and buy after some fall, or should I wait and hold it? Oh, man. Guys, gold's getting down into some cheap prices. I think if you listen to Nick talk about that, if Nick were to answer that, he'd probably answer it like he's kind of talked about of late. As a trader, we want to take advantage of the bearish data, the bearish trends, and try to trade to make a few points out of it. But if you're a longer term, like your portfolio or longer term trader, position trader, it's probably a good idea to start scooping it up. Okay, he talked about this, I think, a week ago, just going back to gold, silver for a second. But he talked about that a week or two ago. It's starting to get into some really good value prices if you are a longer term buy and hold trader. And you know what? Supply and demand works the same way on weekly timeframes, on monthly timeframes. Do I have any monthly demand? What is that? Oh, that's some old stuff I had drawn up at one time. Let's take a look at a monthly chart. A monthly demand. Where's my monthly demand? Start with that. Well, it's staring at me straight as day right there. If we go down to the 34.5 level, there's a pretty good looking monthly demand. I'll color that orange since it's higher time frame. So there's a monthly demand. What about a weekly? You can probably find something in there. Let's go back to monthly real quick. Okay, monthly, no, weekly. And we're obviously getting close to one of these kind of major swing low areas, as you can see from this blue dash line over here. It's going to look a little more major if we go down to a daily. But as far as actual zones, so the weekly zone we had was right here. That was a weekly demand, and look what happened right here. Caught a bid, got a big bounce. Well, now we've got a monthly, a little deeper down. And I could also draw up this candle here as a weekly. So this is a weekly inside of a monthly. It's a pretty good confluence point. And then lastly, what's the daily look like? It's probably not going to look the greatest. I would just probably stick with monthly and weekly. Yeah, I think that wick probably touched that candle, so probably couldn't utilize that. Yeah, monthly, weekly. I don't know. You do what you want. I mean, if I'm trying to, again, just like Nick says, if we're trying to buy long-term and hold, it's probably a good place to start adding into it. I think that's what he said he was doing. But absolutely, do what you want. But yeah, just consider both sides of the coin. Because if you're a trader, we're all about trading right now. Trading, trying to catch a few points on the way down. But if you're a position trader, you got to admit we're still at an overall pretty good uptrend. Now, we have had quite the pullback, the ugly pullback this year. Get my moving averages up here. I don't even know what moving average I got there. Oh, that's my 200, I think. So 200 way down here. Yeah, we still got quite a ways to go. Let's see what I got over here. 50. I wanted to get the 50 up there. Yeah, we're still comfortably above the 200, still comfortably above the 50. So yeah, do what you want. But if you are looking to accumulate along the way, got a monthly, weekly demand a little deeper down. Just saying, 34.50. So hope that helps. Yeah. All right. All right, guys, let's take a look. I've got a few minutes left. Take a look at a few of the majors since we already went over the bulk of the non-FX assets. Let's go to a 4-hour. So Aussie dollar still on the bearish list. Nothing changed. This thing has just been dancing in this daily demand forever. Now, we did get that break and close I mentioned yesterday, which opens up this red projection arrow for me personally for that supply. So we're still a long ways away on that one. Euro dollar, I did want to touch on this one because I'm still keeping an eye on this one here, which is kind of part of a flip zone. If you guys remember, we talked about that a couple weeks ago. This thing did turn into a supply to the downside. Now, we had a minor, I think it was a 30-minute zone that I drew up for you guys yesterday, which is basically where we got this rejection here, rejection here, rejection here. What is that? And sorry, I'm losing my voice real time, but that's basically a triple top on some of these smaller time frames. Anytime you get double tops, triple tops, double bottoms, triple bottoms, there's typically going to be some stop losses on the other side of that. So if I'm trying to short in this 4-hour zone up here, I see that we had shorts push down here. They push down here. They push down here. Where's their stop losses? Oh, right above. Now, we don't know how high this range is, but even if it's clear up here, those buy orders are hanging out in this supply zone. Big banks, institutions need a lot of buy orders to fuel their sell orders. And then just the unfilled orders that remain in the supply zone, I think that that's a pretty good confluence in its own right for the euro dollar, which is, of course, giving us the most bearish score at -13. So this, when it comes to FX pairs, this is my favorite short opportunity. Just got to wait for it to come up and sweep this liquidity, take the unfilled orders so I can take the other side of it and follow the banks. Okay. Follow the banks. Learn what the banks are doing. Follow the banks. That's how I would suspect to follow the bank on this particular bearish bias. Okay. Euro dollar, pound dollar. That's the one I'm still. Oh, never mind. It looks like I did finally get tapped out. So yeah, you guys remember I put my stop loss above this. So the next stop on pound dollar is a little bit higher up on this 4-hour. But between euro pound and, between euro dollar and pound dollar, I think euro dollar is going to be the one I'm going to stick with for now because pound dollar has way too many choices for me at supply right now. And I just think I like the euro dollar look a little better for now. Okay. It could make a liar out of me if I'm wrong on this supply. Well, got a few to choose from on the pound dollar short side. You got a 4-hour zone there. Former support becoming resistance. We're really not that far away. So this is honestly going to be a little bit hard of a choice between pound dollar and euro dollar. Well, let's go take another look over here. Pound dollar is -9. Euro dollar is -13. Now, we already know the PMI is going to update. So euro dollar is 4 points weaker than the pound dollar. Now, that doesn't always mean that's going to be the one I just default to, but it'll definitely influence it because there's more points where the dollar is stronger than the euro, than the pound dollar. So probably going to be, yeah, I'll probably end up flipping a coin between the two. Or I could also put in half a position on both, right? I could take advantage of both and have two currencies try to help me out. Last part to that is over here. Again, euro dollar, or the euro, I should say, is the weakest currency. Pound is right there in my bearish avenue as well, 40 or lower. Probably going to stick with euro dollar, though. Euro is the weaker of the dollars. Christine Lagarde flapped her lips the other day. She says they're being a little extra cautious. In fact, I did this little chart, guys. I'll end it on this. I put together this little chart for you guys where I just simply asked it to give me an idea of how these people govern. Jay Powell, obviously on his way out. Kevin Warsh coming in here in the middle. And Christine Lagarde. The thing I thought was interesting was how, and I watched Christine's speech at the ECB forum in, Portugal is where they're at. Yeah, Portugal. And she talked about how she was forward guidance, but she's moving away from it. So I'm just curious. What do you guys think? Is Kevin Warsh, is he having a big influence on Christine Lagarde? That's the two biggest economies in the world, okay? And I think the European Union, the Eurozone, I think they're slightly bigger than us here in the States when you look at all the collective countries. But she sounds to be moving away. She sounds like she's moving away from forward guidance as well. And it even says right there for Jay Powell, he used it heavily, but became more cautious. So these two, I feel like, are learning the lessons from what Jay Powell didn't do so well. I don't want to criticize him by any means, but that's just what I'm seeing. It sounds to me like they're taking those lessons and just kind of changing things up and eliminating it. And we already know that Kevin Warsh isn't so big on the PCE. He's looking for more of trimmed versions of the inflation numbers. So we got a lot of new stuff, but I just thought this was a pretty cool chart. The approach, the philosophy, the tone, and market implications. So go rewind that if you guys want to take a look at this list. But at this point, it is the end of my shift. So I am going to leave you guys, but trade safe today. And just one last quick look at over here at the Dixie. Okay. So yeah, just one final look at the PMI results, just going sideways. It's kind of a nothing burger at this point when it comes to the manufacturing PMI data and how it's reacting with the currencies. So anyway, ladies and gents, take care, trade safe, and we'll be back tomorrow and run it back again. Deuces.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.